Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Friday, the 19th of December. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, we delivered. EU leaders agree a landmark deal to lend Ukraine €90 billion using joint borrowing.
The Bank of Japan lifts rates to their highest level since 1995, but a lack of clarity on the path ahead drives yields to multi-decade highs.
Plus, internal documents reveal how a loan from the billionaire Weston family helped trigger the collapse of a €23 billion empire.
Let's start with a roundup of our top stories.
European Union leaders have reached a landmark agreement to lend Ukraine €90 billion for the next 2 years. The decision came in the early hours of this morning after marathon talks in Brussels. Under the agreement, the EU will raise joint debt backed by the bloc's budget to fund the loan. That's a significant pivot from a previous plan favoured by many countries to use Russian assets frozen on EU soil. Speaking after the deal, EU Council President Antonio Costas set out how the agreement would still be tied back to those Russian assets.
As a matter of urgency, we will provide a loan backed by the European Union budget. This will address the urgent financial needs of Ukraine. The Union reserves its right to make use of the immobilized asset to repay this loan. At the same time, we gave a mandate to the Commission to continue working on the reparation loan based on Russian immobilized assets.
Antonio Costa speaking there as leaders hope the deal will strengthen Kyiv's hand at the negotiating table and keep the war-torn country afloat. Speaking after the agreement, Germany's Chancellor Friedrich Merz described the deal as a pragmatic, good solution. France's President Emmanuel Macron said the absence of this decision would have been a disaster, but that Europe will have to find a way to engage directly with Vladimir Putin as the US pushes ahead with peace talks.
Now, Japanese bond yields have jumped after the Bank of Japan hiked interest rates to the highest level since 1995. While the bank's quarter-point move to 0.75% was widely expected, traders are focusing on the lack of clear guidance on the timing of future hikes. Here is our Japanese economics reporter, Paul Jackson.
It's not quite back to the 1980s, but it's certainly back to the 1990s. This is the highest interest rate since the 90s, 30 years since it's been this high. And we've seen the yen weaken a tad after the decision. And we've also seen benchmark yields rise above 2%. And they haven't really been at that level regularly since the late 1990s.
JGB yields currently trading at 2.02. Paul Jackson speaking there. This after Bloomberg reported last week that Bank of Japan officials see it as likely that interest rates will eventually rise above 0.75% before the tightening cycle ends.
The Bank of England delivered its expected rate cut yesterday, but its policymakers are warning there's limited room for more reductions. Britain's central bank moved its base rate to a 3-year low of 3.75%. The Governor, Andrew Bailey, says recent inflation data has been a positive surprise.
I think now that we're on a path where we'll probably be around this level for a few months, but we think that come the spring, April, May time, we should see another quite sharp drop and take us, I hope, to around target. So we're going to come back to target sooner than we thought. So that's encouraging. All of this is very encouraging.
Bailey's decision to cut rates for a 6th time comes as concerns in Britain shift away from persistent inflation and towards a stuttering economy and labour market. Despite that, a new survey of consumers suggests sentiment has improved in the run-up to Christmas. GfK's gauge for big-ticket spending rose to -11 in December, up 4 points from November, and the highest score since January 2022.
In other news, officials have found the dead body of the suspected gunman in a rampage at Brown University. The suspect was named as Claudio Manuel Neves Valente, a 48-year-old Portuguese national who was a former student at Brown. The chief of police in the town of Providence, Oscar Perez, says the suspected shooter took his own life.
An individual was identified as Claudio Neves Valente, and he was a 48-year-old man. He was a Portuguese national, and his last known address was in Miami, Florida.
The authorities say there is no longer a threat to the public, ending a manhunt which had lasted nearly a week. 2 people were killed and 9 were wounded in the mass shooting last Saturday at Brown University.
TikTok is being acquired by a group of buyers led by Oracle after a long-delayed plan to separate from its Chinese parent company ByteDance. CEO Shou Chu told employees about binding agreements to create a US joint venture, majority owned by American investors, in an internal memo seen by Bloomberg. The news comes after a national security law passed under former US President Joe Biden mandated ByteDance and TikTok US to have no operational relationship. Our senior editor for technology and strategic industries, Michael Shepherd, says we still don't have all the information.
And yet the security guarantees are going to be one of the big questions out there. And the other will be, has China signed off on this as well? And we are waiting to see what Beijing will say and if it has been part of the trade conversation.
Bloomberg's Michael Shepherd speaking there. The terms outlined in Chu's note to employees appear to leave the door open for ByteDance to potentially retain oversight of key parts of US TikTok. The deal is expected to close on the 22nd of January, but Chinese regulators have yet to say whether they'll approve the transaction.
Wells Fargo has been sued by a former manager who claims the bank faked its diversity commitments. Joseph Bruno says that he was fired after objecting to what he identified as the lender's practice of interviewing minority candidates for jobs that were already filled. The allegations made by him and others sparked a criminal investigation led by the US Department of Justice into whether the bank violated civil rights laws. The probe was later closed without charges, according to a regulatory filing. Wells Fargo didn't immediately respond to the news. The bank has previously called Bruno's claims baseless and said that the fake interviews weren't widespread if they happened at all. Those are some of our top stories for you this morning. Let's just go through the markets. With that Bank of Japan hike, we are watching the Japanese yen, which is weakening 0.3 lower against the dollar, even though we've seen a spike in yields. 10-year JGB yields have moved 5 basis points higher, so 2.02 for the 10-year benchmark. The Nikkei rallying more than 1%. The euro little change. European stock futures down 0.3 after the US CPI reading yesterday cooling. 10-year US Treasury yields adding 2 basis points this morning. Bloomberg Dollar Spot Index is ticking a little bit higher. That is a look at the markets.
In a moment, we'll bring you more on that major EU deal to provide financial support to Ukraine, plus why a private loan from the owner of Selfridges became a flashpoint in the collapse of a €23 billion empire. But another story that we've been reading this morning, or watching, I should say, if you're being currently swamped with corporate Christmas messages, spare a thought for the top management at Blackstone. To celebrate the private equity giant's 40th birthday, they produced a special holiday video about their midlife crisis. Let's take a listen.
Turning 40, it's a really big deal.
Did you get a nose ring?
I've always had this.
Some of us are in denial that we've become a mature organization.
Hey, guys, let's start buying sports teams.
Okay.
We could buy Ferraris.
No, let's buy Ferrari.
Yes!
Yeah, we're definitely having a midlife crisis. Wait, are we rolling?
Even Steve's going through it.
Well, I was thinking of becoming a DJ.
Steve Schwarzman, a DJ? He'd crush.
Yes, that was Goldman Sachs CEO David Solomon making a cameo at the end there in that Blackstone video. Other notable appearances, Danny DeVito's in it as well. It's actually over 7 minutes long. I mean, it's quite the storytelling arc.
Yes.
Very impressive to have put this together. But also, I mean, these people whose day job is not acting did a not bad job, I have to say, for playing out this role.
I don't understand now that you have to be a money manager but be able to moonlight as a late night talk show host / comedy, genius. Of course, it's beautifully edited and carefully thought out. I mean, all power to them. I think it was a good effort, and it is actually quite funny.
Yeah, and look, it's also part of the business message they're trying to get across too, is they're actually opening up their business to more I suppose everyday investors or more retail investors as well. Will they be won over by guitar riffs and 80s hairstyles? It's not the worst campaign I could think of to try and get people's attention.
Yeah, love it. Okay, well, that's something that has caught our attention. I'm sure it will be doing the rounds today, no doubt. But let's also think about our top story today and the deal reached by EU leaders to use common debt for a loan to Ukraine of 90 billion euros over the next 2 years. Now, Stephen, I wanted to ask you about the significance of this deal, as the EU's foreign policy chief, Kaja Kallas, was in the radio studio with us yesterday. She told you that she only saw a 50-50 chance of any agreement, but it was also the fact that it took so long to get to this deal and went on into the wee small hours of the morning.
Yeah, indeed. It was just before 3 a.m. local time here when the deal was actually announced. The message going into this is that a deal had to be found because Ukraine's financial situation was so perilous in the coming months that the EU needed to step up and do something. Kaja Kallas wasn't overly optimistic when we spoke to her yesterday morning, and that was because of the continued opposition from Belgium to a plan to use frozen Russian assets that are held mostly at Euroclear in Brussels to back the 90 billion euro loan for Ukraine. Now, there was a second option on the table, or some diplomats have described it as being on the shelf in the run-up to this meeting, and this would have been using the EU's own budget to back joint borrowing for the loan for Ukraine. It was seen as much less likely going into this meeting, and actually that is closer to what we got in the final version of the agreement. So the 90 billion euro loan will come from joint EU debt issuance using the headroom that's available in the EU's budget currently. That was passed with unanimous agreement, but Ukraine will only need to pay back that loan once it receives reparations from Russia, and the EU has reserved the right to make use of those frozen Russian assets to finance the loan, and those assets will stay frozen until the reparations loan is paid. So there is still a link to those frozen Russian assets in this deal, even though the initial financing will come from joint EU borrowing. Now, the conclusions do note that this deal, this compromise that was found, will not have an impact on the financial obligations from 3 member states: Hungary, the Czech Republic and Slovakia. So that means that if there were to be a repayment, that this wouldn't fall on those member states. So that clearly gives an indication of what the negotiations were like behind the scenes, but it was signed off on by all those countries. That's the nitty-gritty. If we talk about the significance, this is a huge achievement for EU leaders. They've demonstrated, despite all of the criticism, that they can do a deal. Kaja Kallas told us this yesterday, that a deal would send a signal of support to Ukraine, but also to Russia, that the EU is still present and supporting Kyiv, and also to the US, that the EU is stepping up where the US is pulling back. That doesn't mean that it was an easy solution. A very long day of negotiations, as we mentioned. I can tell you, Caroline, I'm normally the first person in this office in the morning, and the time that I arrived, the coffee cups were still warm from our colleagues who'd been here all night reporting on this as well. There are, of course, more details to be worked out, but it is nonetheless a headline that EU leaders wanted to see this morning, that there was a deal.
Okay, I think that's very interesting then, that it is being seen in this positive light. I want to bring in Tony Halpin, who leads our team covering Russia, for more. Tony, very good to speak to you. How important do you think this deal is from your perspective for Ukraine?
Morning, Caroline. Well, I mean, Ukraine had said basically it was a matter of their survival whether they got this money or not. As Stephen noted, the US has pulled back. It's provided practically no financing this year for Ukraine. And if the EU had blinked and said that we're not able to provide financing going into 2026, Ukraine was facing a really dire situation to fund its government and to continue supporting its defense much beyond spring. The deal now allows Ukraine to stand up and say, well, look, we have the support of our European allies. We are able to continue this war effort. And that's a signal to Russia as well that it's not going to step back, and that therefore it can't be browbeaten into some kind of unacceptable deal, that it's there to negotiate, but it can't be forced into surrender.
But the frozen assets are still in line to be used eventually to repay this loan if there isn't reparations paid to Ukraine. And of course, part of the hesitancy of using those assets in the first place was the risk of retaliation from Russia. How is Moscow likely to respond to this plan?
Yeah, so the Central Bank of Russia has been making very threatening noises in the last week or so. It's begun, for example, legal action in Russia against Euroclear, Euroclear for in excess of 200 billion euros. It's also, yesterday, it threatened to extend legal action to European banks where Russia's frozen assets were stored. And it was basically raising the tensions and making an attempt really to see if some members of the European Union would blink and back away. On one level, you could say that actually had some effect, right? Because in the end, they couldn't find consensus on this original plan for frozen assets and had to raise the money backed by the EU budget. But it's still the fact that the Russian assets are frozen, and that's going to be a bone of contention for years to come.
Yes, it is. Let's see then what happens with this, but a very important day when it comes to Ukraine nonetheless. Tony, thank you for being with us. Tony Halpin, who leads our team covering Russia. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
René Benko, the Austrian property tycoon who built a €23 billion global empire spanning New York's Chrysler building to London's Selfridges department store before his company, Signa Prime Selection, collapsed, faces potential new fraud charges, according to a dossier compiled by Austrian authorities and examined by Bloomberg. Now, Benko denies wrongdoing, but let's dig into the details of this story with our Vienna bureau chief, Martin Eder. Martin, good to talk to you. These documents are the most detailed look at the inner working of Benko business. Tell us more about who he is, and he's been under arrest since January.
Good morning. So René Benko is a self-made businessman. He was once one of the richest in Austria, after the Red Bull family, Mateschitz, and the Porsche family. He owned a number of high-profile luxury real estates across Europe. You could mention the Selfridges department store, but also the Hotel Bauer in Venice, and KaDeWe in Berlin. And his story is very much that of the zero interest rate era. He was investing in real estate when he could get cheap loans and property prices were rising. But that obviously faced headwinds when interest rates went higher after Russia's invasion of Ukraine. So he's faced a number of problems. His companies are insolvent, and him personally, he's been in pre-trial detention since January. He's been sitting in the Josefstadt prison in Vienna's 9th district, and prosecutors have taken him into court on 2 accounts of insolvency fraud. He has appealed the verdict so far, and he denies wrongdoing. So that's largely where we stand in Benko's personal fight with justice.
Okay. So when it comes to his company, Signa, there are quite a number of interesting names and players involved in this story. How did Canada's Weston family end up being caught up in the insolvency?
Yeah, so this is a very interesting story, and this is what we focus on in our piece today. The Weston family, obviously, they own a lot of retail businesses in North America, and they used to be the owners of the Selfridges department store in London. They owned it for 18 years, and sometime around the COVID pandemic, they said that, well, maybe such concentration in retail is not the best idea. So they started looking for a buyer, and here comes René Benko, who already owned luxury department stores in Switzerland and Berlin, in Germany. And obviously he was a good candidate, and he's a very convincing person, very charming person, like many Austrians. And he put an appropriate deal on the table. And so they agreed to the transaction at the end of 2021. And it was an interesting time because consumers were returning to in-person purchases. The mood was somewhat buoyant after COVID restrictions. And there was really a sense that retail might be a booming industry in the coming years. What they didn't understand, or at least for Benko, was that interest rates would start rising. This was just before Russia invaded Ukraine. So Signa undoubtedly already faced difficulties in trying to close the deal, coming up with the financing. And this is the link where the Weston family got involved with the broader insolvency of Cigna. The Weston family provided a £300 million vendor loan to help close the deal. So the whole deal was worth £4 billion, and the Weston family was willing to put £300 million in to help the financing. This is not uncommon, but it is sort of a commitment to the transaction. And over the course of the insolvency, which in earnest, the financial difficulties started in 2023, but the insolvencies were filed at the end of 2023. That left the Weston family with a large part of that loan outstanding, and they're still fighting to get that money back.
So where do the investigations stand in Austria now?
There are a number of lines of investigation. So far, the prosecutors have filed 2 charges of insolvency fraud against Benko himself. So obviously, he has denied wrongdoing and he's fighting those verdicts. So one of the verdicts is a 2-year prison sentence for donating 300,000 euros to his mother just before his insolvency. So basically, prosecutors say that that was a transaction that hid some of his private wealth from creditors in a time when he shouldn't have been making those payments. The other strand is quite a similar insolvency fraud case. He locked up some of his luxury watches in a safe, and prosecutors say that that was also legal from an insolvency process standpoint. But prosecutors are also looking at broader fraud, insolvency fraud, and embezzlement charges. Benko has denied wrongdoing on these, but those have yet to go to court. And the documents that we reviewed relate to one of these strands, and how René Benko allegedly used some money that he collected from shareholders for a capital increase and ran it through a network of companies, and then used that money and presented that money as his own. And sort of the Western links comes here that he actually used some of that money as part of the financing difficulties to try and repay the Western loan. But apart from that, there's also a few arbitration cases. We have seen court filings from some of his most prominent investors, Mubadala in the Middle East, some other high-profile family offices. There's insolvency administrators are still trying to sift through the rubble of his empire, and I can tell you lawyers and courts will be busy with this Cigna story for a number of years in Vienna.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.